Hi, and welcome to this short video from buyandstoregold.com about this article that Jim Cramer wrote, or at least had written about him, I guess, with regard to gold. And Mr. Cramer is once again suggesting that gold be owned as portfolio insurance. And he recommends no more than 10% of your portfolio be allocated to gold because it's just insurance. Now, he says here that he says it tends to go up and everything else is going down. Well, Jim, that doesn't really seem to be the case anymore. That used to be the case at one time. Perhaps that was before all the massive manipulation that we've had in the gold market and in the silver market, of course. We certainly have not been seeing the typical reaction or the expected reaction with such as the mayhem in Greece, the collapse in China, all these sorts of things. Now, here's one of the other things that I think Mr. Cramer's totally missing the point on. He's talking about the easiest way here to protect yourself is with GLD. And granted, that is the easiest way to buy some representation of gold, but it is some representation of gold. You're not buying gold. When you buy and sell GLD, we have no idea if the gold is there. Let's say it is. You get that piece of paper, your brokerage statement says you own GLD, and when you sell it, they redeem in US dollars. So what gold is better insurance for is against US dollar collapse or just continual erosion of the US dollar. People say, well, the dollar won't collapse. Well, maybe not, although it's only lost, what, 90% of its value since the Federal Reserve was created 100 years ago. So for people who have held gold during that period, they still have purchasing power. People holding dollars do not. Now, if you think financial collapse just couldn't happen, so you do not need to be protected against financial collapse or the dollar just getting blown out of the water. Well, what did we have in 2008? Our government said that all the bailouts where no one went to jail, but where all the banks got bailed out, it was justified because we were at the brink. I'm pretty sure that's the word they used. We were at just the brink of collapse. Well, if we were that close in 2008, and all experts agree things are worse now with derivatives and with the leverage that the banks are at. The banks that were too big to fail in 2008 are bigger now. And all the executives that were apparently too fat and happy to jail are just fatter and happier. So I think in this article, I think when it comes to gold, I mean, Jim Cramer is obviously a Wall Street insider. He would never, ever recommend owning physical gold. And he says down here, he says, well, you could potentially call your broker and buy bullion. Like the cubes I put in my soup. It only makes sense for investors to have lots of money, can afford to buy gold in bulk and pay to store it in a depository bank. Come on, Jim. Are you just flat out lying here, or do you not know about all the ways that a person of modest means can buy gold and have it stored? And this is allocated gold. We have vendors like Bullion Vault and Gold Money that, while not perfect, certainly a person with limited funds can buy real gold, real silver, and they can be protected better than with GLD. But we have a lot of other options as well, and of course we write about them at buyandstoregold.com. Now, why in the world, Jim, would you want to put this in a depository bank? Just doesn't make any sense at all. Here is a blog post that we wrote May 20th of 2012, where King World News reported that a wealthy client of a Swiss bank, now the Swiss are supposed to be the most reputable banks, right? The client had allocated gold, the bank had misappropriated gold, and the gold was gone. So this bank was charging this customer to store gold, and the gold wasn't there. The bank had picked up another fee from somebody else to loan that gold out. Now, if we did that, that would be called fraud, and we'd be in jail. We'd be behind some bars that look kind of like this. But with bankers, well, that's just the way things work. So why in the world would you want to take, if you're wealthy or if you're not wealthy, would you want to take your money, buy gold, put it in a depository bank like this Swiss bank here, and then find out that they're loaning it out, and even though it's not there, still charging you to store it, still charging you to insure it when it's not there? Jim, you're missing the point, buddy. And you don't have to be rich, and you do want to buy physical gold, physical silver. Now, you may want to keep some of it close to hand at home. Personally, we found that that's a good way to lose a lot of sleep. There are better options, and at buyandstoregold.com, we talk about what some of those options are. We've got reviews. You can kind of go down the list. Our favorite is Hard Assets Alliance. Again, you do not need to be wealthy, you can have small amounts. It can be physical gold. It can be the gold coins of your choice, the gold bars of your choice. They are stored in a non-bank vault that is insured, that is audited, unlike the Federal Reserve or probably unlike these banks. And you know it's there. And you can call them up and have it shipped to you at your request. Now, why should we trust a Brinks or one of these other companies like Viamat that stores the gold for companies like Hard Assets Alliance? Well, they're private companies. If gold goes missing, they will go to jail because they're not a bank. They can't do what the banks do. That's why we trust the private companies like the Viamat, like the Brinks, like some of these other vaults that are secure, they're insured, they're in various jurisdictions around the world, because they know if they screw up, somebody's going to come after them. They're going to throw them in jail. Bankers don't have to worry about that. So I believe Mr. Cramer is totally and completely missing the point. Yes, you want to own gold. Is it portfolio insurance? Well, not so much anymore. You can't count on gold going up because the stock market goes down, for instance, or something like that. So I have no idea what he's getting at here, other than the fact that he is a Wall Street insider, and he's never going to recommend taking money out of the market and putting it into physical gold bars. He is not going to want you to have physical bars of gold, physical coins, and have them stored somewhere that's not in control of the banks, that's not in control of Wall Street. So anyway, that's it for this video. I've got a link in the description. I've got a link here on the screen where you can click and go to our website. You can check this out a little bit more. You can look at that article from 2012 about the Swiss bankers and find out what you might want to do to protect your wealth. And if you want to buy GLD for trading, that's fine. You want to just trade the price of gold, GLD is a great way to do it in a low-cost online brokerage account. But that's not a way to protect your wealth. That's not a way to protect from financial collapse. That's not a way to preserve your purchasing power over years and decades and generations. So that's it for this video. Thanks for watching. See you next time.